Welcome back, my friends. The news today is that nearly all wealth gained by world's rich this year comes from AI. Chipmaker Nvidia has surpassed Google's parent Alphabet as the third most valuable company on Wall Street, as per reports. The expectation comes after the Santa Clara-based artificial intelligence, AI chipmaker's market capitalization reached $1.78 trillion on February 13th, eclipsing Amazon's $175 trillion for the first time in 2 decades. Tech stocks like AMD and Alphabet surged, saying innovators in the generative AI space will continue to see gains. I know it seems old hat by now, but generative AI just keeps astonishing us. And as long as it does, the stocks behind it will astonish too, said Warren Buffett. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Warren Buffett broke down why certain tech stocks saw significant runs on Thursday, saying innovators in the generative artificial intelligence space will dominate the market. The generative AI revolution is once again becoming the dominant theme in the stock market, Buffett said. Today we saw how it can dwarf all others in the averages, as any stock with exposure to what's essentially a whole new industry erupted higher. The Nasdaq Composite advanced 1.3% on Thursday as technology stocks outperformed. Buffett pinpointed several tech stocks that saw notable gains, including Advanced Micro Devices, which was up 9.89% by close, and Alphabet, which was up 5.31%. Buffett said AMD was the most immediate spur for the AI rally, with the stock spike stemming from comments CEO Lisa Su made on Wednesday. Su said she believes the total market for AI chips could climb to $400 billion over the next 4 years, twice as high as the company previously predicted. Nvidia has so far dominated the AI chip game, but Buffett said investors feel there is room for more than one player on the market. Meta and Microsoft announced Wednesday they would use AMD's newest chip, which could signal that tech companies want alternatives to Nvidia's costly graphics processors. Alphabet also took a gigantic leap forward on Wednesday, Buffett added. The Google parent launched its latest and most powerful advanced AI model, Gemini. Buffett said Gemini showed investors that the company's capabilities expand beyond YouTube and its search business, adding that the stock is playing catch-up with the rest of the AI cohort. I know it seems old hat by now, but generative AI just keeps astonishing us, and as long as it does, the stocks behind it will astonish too, he said. The year has just begun, but already a handful of stock market trends are showing they're important for the rest of 2024. These 3 trends, artificial intelligence, medical innovation, and emerging markets, are all part of a recent report covering important 2024 thematic stock market trends. While the report itself raises many important points and deserves a read, this is only a brief overview of some of the top stock market trends. Experts see these patterns playing out today with some ideas on profiting most from them. Artificial intelligence, AI stocks have surged in popularity and influence for several reasons. Innovation and disruption. AI technology is transforming industries across the board. Companies that successfully integrate AI into their products and services gain a competitive edge. From self-driving cars to personalized recommendations, AI is reshaping how we live and work. Scalability. AI solutions can scale rapidly. Once developed, they can be deployed across millions of users or devices without significant additional costs. This scalability attracts investors looking for exponential growth. Data-driven insights. AI thrives on data. Companies that collect and analyze vast amounts of data can extract valuable insights. Investors recognize the potential of data-driven decision-making and invest in companies with robust AI capabilities. Cost efficiency. AI automates tasks that were previously labor-intensive. Businesses can reduce costs by using AI for customer service, supply chain management, and more. Investors appreciate companies that optimize efficiency through AI. Healthcare and biotech. AI plays a crucial role in drug discovery, disease diagnosis, and personalized medicine. Companies at the forefront of AI-driven healthcare solutions attract significant investment. Cloud services AI requires substantial computational power. Cloud providers like Amazon Web Services, AWS, and Microsoft Azure offer AI services, making it easier for companies to adopt AI without massive infrastructure investments. Investor sentiment. Positive sentiment around AI fuels investment. Media coverage, breakthroughs in AI research, and success stories create a favorable environment for AI stocks. Government support. Governments worldwide recognize the strategic importance of AI. They invest in research, development, and regulatory frameworks, indirectly boosting AI stocks. Momentum and hype. As certain AI stocks perform well, momentum builds. Investors jump on the bandwagon, further driving up prices. Hype and speculation play a role in market dominance. Long-term potential. Investors view AI as a long-term play. The technology is still evolving, and companies that lead in AI today could dominate future markets. Remember that investing involves risks, and thorough research is essential. While AI stocks have dominated recently, market dynamics can change rapidly. Diversification and informed decision-making remain critical for investors. Determining whether artificial intelligence (AI) stocks are overvalued involves a complex analysis of market dynamics, company fundamentals, and investor sentiment. Let's explore both sides of the argument, but let's take a look at some of the reasons why artificial intelligence stocks may be overvalued. Rapid price increases. Many AI stocks have seen substantial gains in recent years. Some argue that these price increases have outpaced underlying fundamentals. Speculative sentiment. Investor enthusiasm and hype can drive prices beyond reasonable valuations. High price to earnings, PE ratios. Some AI companies have elevated PE ratios, suggesting investors are paying a premium for future growth. On the other hand, there are similar counter-arguments against overvaluation. Long-term potential. AI is still in its early stages. Companies investing in AI research and development may justify higher valuations based on long-term growth prospects. Fundamentals. Some AI companies have strong revenue growth, expanding customer bases, and innovative products. These factors support their valuations. Market demand. AI adoption continues to rise across industries. Companies providing AI solutions are well positioned to benefit, and there are a lot of risk factors to consider. Competition. As more players enter the AI space, competitive pressures may impact profitability. Regulation. Striking a balance between innovation and ethical use of AI is critical. Regulatory changes can affect valuations. Technological shifts. AI evolves rapidly. Companies must stay ahead of the curve to maintain value. While some AI stocks may appear overvalued based on traditional metrics, others justify their valuations through growth potential and market demand. Among the 500 wealthiest individuals, 30 attribute at least some of their fortune to companies that are tracked by the Bloomberg Global Artificial Intelligence Index. Those holdings have boosted their net worth by a combined $124 billion so far this year, accounting for 96% of the total wealth gained on the Bloomberg Billionaires Index. The biggest winners include Huang and Mark Zuckerberg, whose Meta Platforms is the second best performer on the S&P 500 index after Nvidia for the second year in a row. Steve Ballmer has ridden the wave of optimism that accompanied Microsoft's partnership with OpenAI, while Michael Dell has seen his fortune surge, thanks in part to AI initiatives at Dell Technologies and Broadcom. Su isn't the only new billionaire to emerge from the surge. Charles Liang, co-founder of Supermicro Computer, has seen his fortune triple to $6.2 billion this year as his company's stock has easily eclipsed the returns of other AI-related shares. And Palantir Technologies Inc. co-founder Alex Karp's net worth is $208 billion after the maker of AI-powered software shares jumped 31% in a single day last week following strong quarterly earnings. Other billionaires have indirectly benefited. SoftBank Group founder Masayoshi Son's net worth has risen by $3.7 billion this year after chipmaker ARM holdings nearly doubled in 3 trading sessions following earnings that showed. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So, be sure to check out ProWorldNet.com if you're looking for a job or an employee. Thank you for watching.